Hi, everyone, and thank you so much for joining us for our first ever virtual NCN All-Star Pitch event. We're super excited to be bringing this event to you virtually and can't wait to showcase our top 7 emerging brands who pitched as a part of our NCN 2019 cohort. If you're watching this event live on Wednesday, April 22nd, and have registered for this event, you'll have a unique opportunity to meet with any of these teams just after the event has aired from 12 to 2 MST. We're so grateful to have you joining us. And now I'd love to introduce you to a few of our Nutrition Capital Network team members who will be joining today's exciting pitches and also helping us ask a few questions of each of the brands. Claire?
Thanks, Denver. Hi, everyone. My name is Claire Cook, and I am on the marketing team for Nutrition Capital Network. At Nutrition Capital Network, we combine our annual investor meetings with access to a year-round network of resources to help active investors make purpose-driven connections with curated health and wellness brands. We're so excited to bring you this digital event today, a first of its kind for NCN. While we know that ultimately nothing can replace in-person connection, we hope that this fast-paced presentation will help you feel truly connected with some really promising emerging entrepreneurs, and also remind you that we're all here to support our community from the NCN team in whatever way that we can. I want to remind all of you who registered for this event, like Denver was saying, you're able to schedule one-on-one meetings with our presenters by logging into the NCN Engage networking tool. Our presenters are going to be available today, April 22nd, for 2 hours following the conclusion of this presentation. And we encourage investors to schedule a few 30-minute meetings with different presenting brands during that time. You can also message the presenters directly through NCN Engage if you want to set up a meeting at a different time or date. If you're not already logged into the NCN Engage tool, please refer to your registration confirmation for login information and follow the instructions provided on each page once you're logged in to schedule meetings and send messages. We're really excited to have you guys here, and we're really grateful that you're going to spend some time with us today. Now I'm going to kick it over to my colleague, Ashley.
Hi, everyone. Thanks for being here. I'm really excited about this event. I'm Ashley Brand, and I'm the Associate Show Manager for New Hope Network and Informa, and help support the overall operations for the Nutrition Capital Network brand. And I'm going to pass it over to Tara.
Thank you, Ashley. I'm Tara Berkeley, and I work across New Hope and many of our brands and helping our investors and our brands of all sizes connect with all the meaningful resources that we have from New Hope, from the 40 years of service to the industry. And I'm just super excited to have everybody here and see everyone and make sure that we are furthering your business through everything that we have to offer.
Thank you so much, everyone. And my name is Denver Lewis. I am a conference and content manager at New Hope. And I'm now excited to introduce my teammates, Mike Dovish and Will Grube, who will provide an official welcome to you and share a little bit more about Nutrition Capital Network in 2020 and beyond.
Thank you, Denver. My name is Mike Dovish, and I'm the Executive Director of Nutrition Capital Network. Nutrition Capital Network helps active investors make purpose-driven connections with curated health and wellness brands. Our online and in-person events provide a marketplace experience bringing together curated brands with active investors. On the next slide, you will see our calendar of events for 2020. We made the decision to transition our in-person event in New York this June to an online digital event, and you will receive more information about that in the days to come. In the latter half of the year, we'll be holding online and in-person events in Canada, Europe, and in the US, with some of those events focused solely on ingredient technologies. On the next slide, you'll see that our ecosystem is robust. It includes over 70 selection committee members, 46 investor meetings, over 4,300 applicants, and 805 alumni companies who have presented, and we track their progress after each event. Some of our alumni presenters are listed here, many of whom you are familiar with, and we have a 52% success rate of companies that have raised capital either directly or indirectly as a result of presenting at one of our investor meetings. Most recently, Power Plant Ventures, who met your super at one of our meetings, was the lead investor in their $10 million Series B. On my last slide, I want to thank all of our sponsors who are vital to NCN and who have been so gracious with their time, particularly in these past several weeks. Those are AVL Growth Partners, BrandHive, Creative Alignment, Davis Wright Tremaine, FONA, Foster Garvey, KGK Science, L.E.K, MPG, PLT Health Solutions, Specialty Nutrition Group, Spins, and Whipstitch Capital, you will be hearing from shortly. Next, I'd like to introduce my colleague, Will Grube.
Thanks, Mike. My name is Will Grube, and I'm the Investor Relations Lead for Nutrition Capital Network. I want to give a big thanks to our NCN Cornerstone investors. We're proud to have 47 investor groups on board with us for 2020, with lots of diversity across these investors in size and scope. The Cornerstone Investor Program supports angel investors, VCs, private equity, and corporate venturing arms with varying focal points across the health and wellness supply chain, from nutritional science and technology companies to the finished goods end with food, beverage, personal care, and supplements. As Mike mentioned, we support investor members with online and in-person innovation meetings, but as well through access to NCN's databases and insight partners. Flipping to the next slide, I want to briefly touch on two of our databases that we curate for investor members. The first we call the Deal Flow Database. Each year, NCN receives around 500 applicants for only 80 to maximum 100 spots to pitch at our meetings. So the NCN Deal Flow Database rolls up all this company information from all applicants into one searchable and segmented resource. Currently, we have 4,300 company profiles in the Deal Flow Database, representing all companies that NCN has interacted with since our inception in 2007. The second resource I want to highlight is the NCN Transaction Database. This records all M&A and equity financing activity across the entire industry, regardless of whether or not NCN played a part in that transaction. This resource has really become an industry tracking database for investors to keep tabs on not only current but historical transaction activity. And this is all to say that we are happy to provide any investor on the call today with a preview of either database to see if it may be a fit to support your workflow. And lastly, if you are an active investor tuning into our NCN All-Star Showcase today, we want to extend a special invite for you to participate in a live-only discussion that we'll be hosting with the Nutrition Business Journal team a week from tomorrow on April 30th at noon Mountain Time. During this 1-hour Microsoft Teams meeting, we will review highlights from the recent NBJ Personalized Nutrition Report, providing active investors with an inside look at the latest data and trends in personalized. In addition to the NBJ team and Tom Arts, Greg McParland will be joining us to share his perspective as the investment director for DSM, who has led more deals in the personalized space than almost anyone in the world, perhaps next to Nestle. We have limited space on the call for investors, so please reach out to me directly at william.grube@informa.com, and I will send you the invite directly. Now I'm going to kick it back off to Denver to start our NCN showcase. Let's get into the content.
Thank you so much, Mike and Will. Next up, we have a very special guest, Nick McCoy from Whipstitch Capital, who will share a short presentation on what to expect in today's investment landscape. Nick?
Great. Thank you so much, Denver. And thanks to everybody here for coming to NCN in its new form. So before I start, I just want to say that I am going to talk a bit about COVID and some of the implications of that, but I am going to save that toward the end, just because there's really kind of two presentations here. There's the main presentation, I would call it, which has much more secular information, things that are not going to necessarily be interrupted here by what is hopefully a temporary couple-year thing at the most. But there are definitely some tidbits and observations around COVID that I think would be appropriate and interesting for everybody. So with that, very quickly, Whipstitch Capital is the largest independent investment bank in the U.S., solely focused on the sector. I know a lot of the people in the room here, but for those that I don't, we are, what we do is we raise capital, call it $10 million and higher, or help companies sell when they're saleable, which is generally speaking 50 or so million and higher in transaction value. And a lot of the value add we have, and the reason why I'm talking about all the things I am, is we spend so much time with companies trying to figure out how they can grow their businesses to be more saleable and more investable and more saleable at the end of the day. Ultimately, one leads to the other. So moving forward here, food and beverage deals are getting larger. And when you look at this slide, these are only strategic bought independent companies. And this is a trend we've been talking about for a while. And as you can see, it's a trend that's been going on for a while. And it's really because large strategics are waiting for food and beverage companies to get to the size that's more comfortable for them, call it $300 million or higher, to be able to buy them, because it's just lower risk and it fits in their model much better. Brands are also getting larger. There is a rising tide of brands, as you can see here, about 5 or 6% a year. And this is also consistent with the growth rate of the entire industry. This has been going on for a while. So talking more about the large strategics, what we're seeing is that there is a gap between founder brands, which, kind of, I wouldn't say easily, but usually manage up to 50 or 75 or 100 million in revenue. And then, once you get to 50 million or higher, things get a lot more complicated. You outgrow your co-packers, have to get multiple manufacturing sources, supply chain challenges. You're beginning to start to recreate what big strategics have done over the years, which is, kind of the multi-$100 million brand management machine. So large strategics have dipped down, but they can't really get too much below that and still maintain profitability with all the people that are, that are kind of in their value chain. And large brands have to figure out, or founder brands have to figure out a way to grow into that gap, that 50 to kind of $300 million in sales. And what we're seeing here is that private equity has made a big step into this gap. Founder brands are actually doing things leveraging a private equity playbook, as well as leveraging other executives and resources in the industry to grow further into it. And large strategics are also doing things like venture groups and the like to make themselves more comfortable dipping down further into it. And I look at this as not an impediment. I really look at this as an opportunity. And like anything in a free market, when there's an opportunity that exists, it can't exist very long without people moving in. And that's why you're seeing so much aggressiveness with private equity. This slide here, slide 7, you'll see that private equity money has gone up about 10x since 2010. And that just substantiates, the movement we're seeing. Lots of deals like the ones on this page. And, we're expecting a lot more over time. One thing that large strategics do really, really well is that they can market efficiently to multiple sectors of demand within their customer base. They're not marketing to an average customer. So when you're a founder brand, you can go out and you can do trade spend, or you can do whatever you're doing, and you've got kind of one ad channel for an average customer. But if you have a room of people and you're selling hats, and half wants red and half wants yellow, and you go out and roll out orange hats, you're not going to sell as many as if you sell one red and one yellow. And that's kind of the concept here, is big companies know where all the pockets of demand are in a broad set of demographics, and they can create one ad or 2 ads for 8, let's say people, and it's much more efficient. And founder-owned companies are doing this more and more, and I think that that's going to enable them to step further into that above $50 million level. One other thing that we've seen develop over time is, if you go 5 or 10 years ago, there was a kind of path forward, which I call managing for growth. You wanted to get as much velocity-driven growth as possible, and you would put whatever money would be economically feasible to do that. And there would be I wouldn't say unlimited source, but for a brand that's growing and getting great velocity gains, there was always plenty of money available and a strategic to buy at the end of the day. More and more, just as the industry has grown so much and brands have grown, and the overall white space has grown, we're seeing more and more companies that are taking a different path, which is what we call managing for profitability. That is, they're raising less capital, they can hold a higher price point, which customers are willing to pay because they're paying for a niche destination product that they need, and they don't necessarily have to drop their price 40% to be $100 million plus in mainstream. They can be 90 ACV in natural, maybe 10, 15, 20 in MULO, have an online business, sell in food service, or maybe even a little bit of convenience. And these businesses get to 30, 40, 50 million in revenue, some more, some less, and they can run 15 or 20% EBITDA. And there's a growing pool of buyers, a lot of them backed by private equity, which are rolling up these businesses. And even large strategics to an extent. If you have a cash flow niche business, there are large strategics that are looking into adding those type of businesses into their portfolio in subgroups within the big company. One thing that we see too is As brands grow, like I said before, they need a broader based marketing at higher ACVs to grow velocity. So if your product is, everywhere in MULO, the more that you can market to everybody out there, the more that they can find your product at stores. So as you cross, if you look statistically at the data, as you cross that 40% ACV range, statistically, when you average all the companies in health and wellness, the velocity drops. And then you see it here, it's about 16% lower on average for the 30 to 40% group than the 40 to 50% group in MULO ACV. And the reason is once you get past 40%, you're now pushing into doors that are not the highest productive doors. And you're also, getting past this customer base, which was that initial group that was already kind of seeking your product and had a very identified need. And you're needing to go out and educate customers that may or may not know yet that they need your product. So you're essentially kind of taking that onion and you're getting to that next layer of potential customers. And then the reason you're seeing in the 50 to 60 and the 60 to 70%, in those buckets, you're seeing the velocity increase is a lot of those companies are owned by larger strategics and they know how to do that. And that's why you're seeing those averages start to go up, particularly as the buckets go up. When you're thinking about business planning and strategic growth, there is an inverse relationship between velocity gain and distribution gains. So the faster you expand ACV and MULO, the more of a headwind you have in maintaining velocity. And it just makes sense because if you have a customer pool and you double your footprint in MULO, you've now diluted it in half unless you have twice as many customers to buy. So if you think about growth, when you're thinking about the strategy of the companies and business plans, there's really two dimensions. One is doors, and the other is, velocity. And the velocity piece is taken care of by increasing the customer base who's going to go in and buy the product in those doors. One thing that gets talked about a lot, and something that we've been thinking a lot about too, is how much trade spend we're spending as an industry. If you look at, this industry is a $250-ish billion industry. That's about, half of that are 125 million of revenue to companies. And if you look at an average trade spend of about 20%, higher in some categories, lower in others, that's almost $25 billion. And if we have a customer base right now that is seeking to buy our products, a lot of that money is money that we're just giving to customers and money that we could be using to build a brand through marketing and our brand ethos even more through sustainable supply chain measures. To back that up further, we actually did a study at Whipstitch where we opened up the Spins account and we looked at the 20 largest brands in Spins. These are really, really big mega brands. And then we compared them to 20 brands that were in the better for you area between 3 and 22 million. And the reason we did that is we wanted one that was right below 3, one that was right below 4. So we would get basically a random sample that objectively covered kind of a revenue band that is pretty typical of companies that this investor pool is looking at investing in. We looked at 2 years of data month by month. So we had 240-ish, or we had more than that, I guess. We had 480 data points for each. And we basically looked at what happens to sales when you move price. And what we found is that if you look at natural brands, they're much less price sensitive. Conventional brands are actually 4.5 times more than natural. And part of that is conventional brands do have things like end caps and they have other marketing means that go in connection with the price decrease. So even if it's 2 or 3x, it still makes the point, but it also makes the point that natural brands need to be able to start doing some of those other marketing things so that they can get more, they can drive more demand when they are on promo for the dollars they spend. If we think about sustainability, sustainability in a lot of historical eyes has been something that's been kind of a subsidy or an expense. And I view my parents were both school teachers, so I view a subsidy as the last day of school when my mother would come in and she'd be carrying a 10-pound box of government surplus cheese, because no matter what they did at N.C.N High School, they could not figure out a way to sell it all through the lunchroom, and all the teachers ended up getting a box of this cheese, which I would be then forced to eat over the summer and didn't want to. We don't want that to be what drives sustainability in the value chain. It is because consumers right now are demanding it more and more. And when you think about it, that demand, it makes it really an investment. It's an investment in your brand ethos, and it's an investment in our planet. To illustrate, if you look at sustainable packaging, The price of sustainable packaging, this is just looking at biomaterials, has dropped considerably over the past few years. And it's actually dropped to the point now where it's having a demand-driven price increase. So the earlier that you get sustainability in your supply chain into your brand ethos, the more authentic it is within your brand. And this is just evidence people are embracing that early on. One tool that we use in business plans is looking at a headroom analysis. And this is both for selling companies, or if you're going to go out and you're going to get, another follow-on investor round. Take a look at the company, look at what ACV you have, how many SKUs, and then you want to compare yourself to somebody who is a better for you leader in your category. So if you look at this slide, and it's kind of busy, but I know that this is something people can look at afterwards, so I left all the detail here. If you look at how many SKUs you have in a certain ACV, you will get your TDP. TDP is simply one SKU and one ACV, so you can multiply the two to get it. And if you look at the kind of innovative category leader, you can see how much more shelf placement that you can convince a strategic or a larger investor that you can get, without really pushing the envelope too far, because somebody else has already validated that. You can do the same with velocity here, and you can do that with different channels. So you can basically come up with a headroom analysis without even having to expand your product set beyond, what you're doing now, beyond your current SKU base, and show that you have credibility of that much more revenue in your plan in a very low risk way. Channels are something to talk about a little bit more too. We see channels as obviously a place you sell product, but also a tool for growth. Natural is really a great channel for product discovery. Shopping is an experience. Customers spend more time looking at brands. Some people say it's kind of 5 seconds at Whole Foods, 2 seconds at conventional. Don't know what the numbers are, but I see that anecdotally in stores as well, for people to look at your brand and buy it. MULO is all about proving mainstream appeal. If you want to get bought by a big strategic and have a mainstream brand, you have to prove that you can sell in conventional grocery. Club is great at driving velocity and volume, particularly when you're well extended in MULO. People will try in Club because they're great at demoing, particularly Costco. And when they run out of your product they buy that day, they're going to look for it in other places. And Club can be at $1,000 per SKU, per week in Costco. It can be a very, very big revenue generator and an efficient distribution system for your company. Convenience is really incremental velocity. You go in, you fill up your car, you walk in, you get a beverage. If it's not there, if your kombucha's not there or whatever, you're not going to make a special trip to Whole Foods to get it. It's a sale that didn't happen. So if you're a snack company or a beverage company particularly, convenience is a very good tool for that. And then online is really a recurring kind of contribution margin staple. It's efficient and it's very, very regular. You can count on it. Where else every 4 o'clock, on a Sunday, once a month, is somebody going to buy your product? Looking at the velocity by size and channel, you can see that convenience in beverage over-indexes MULO about 2.5 to 1. Also, brand size increases, or velocity increases by brand size as you go from the 1 to 5 million level to 20 to 100. And that kind of makes sense because to get to that, you have to have more mind share. You build your brand block. You've obviously got more customer base going and repeating buying, and you get kind of past that point where you're diluting your customer base, and to be a 50 or 60 or 70 million dollar company, you've had to get to that second layer of the onion, essentially that second pool of customers that's not necessarily evident when you started a company. Natural is obviously smaller, but it's you can see the numbers there are very significant, and it's a particularly good channel for discovery. In food, convenience is about 1.5 to 1. And this kind of makes sense because beverage is something that's more easily consumed quickly. I would say that if you think about the Whole Foods beverage kit cooler, convenience is probably about 15 years behind it in what you can get there. And maybe in food, it's about 20. But the point is that if you can expand into convenience, whether it's food or beverage, it is incremental to that headroom analysis and non-dilutive to your MULO channel. So if you have a brand that your headroom analysis says, tops out at 100 million, and you want to get that to 150 or 200, this is a great tool. I always include a little bit of a discussion here about what drives valuation, just because I think these are such core items, and I've actually been to companies and they've had this on their wall, which is great. Obviously, higher revenue is more of a proven product and is going to get a larger multiple, just because it, whether it is a managed for profitability, where you're going to have more profitability, or a managed for growth, either way, you've got a more proven product. Gross margins, very important. Look at your category and try to exceed your category average. Ask around if you don't know. There's lots of people who will have anecdotal ideas on what's in your category for gross margin. Obviously, faster growth is better. Velocity-driven growth is the best. In distribution, more channels is better. Obviously, more channels means more headroom. Capital efficiency, this is your report card. How much did you spend to get your latest revenue? Focus in the last 12 months. Get rid of one-time items. Things like, any legal costs you might have with whatever, failed products, all of that. What did it cost to get the growth that you got in the last 12 months? Because whoever is the new investor coming in or the strategic buying, they're going to look at that and say, that's going to show me how much it's going to take for me to grow this brand. Brand extendability, if you're limited to current offerings, you want to get to something that can get to other categories. Simple story, a small price point premium, frequency of usage. Obviously, the more that people consume it, if it's something like a beverage, people can drink it on the way home. You can't really do that with, a baking mix. Customer pool, obviously knowing that well, category and team. So now just to very quickly talk a little bit about COVID in the last few minutes here, just because I think we have to right now. Obviously, this is a really, really challenging time for everybody personally, professionally, and there's a lot of talk about this. But what we're seeing is deals are still getting done. Funds still need to deploy capital. A lot of the funds that are larger and are significantly far in their fund cycle, are heavily invested, are distracted with portfolio companies. And for CPG companies, there's a big surge in demand. And for people with food service exposure, well, that's not really there today like it was a few months ago. So if you are going to raise money today, the best thing we think, unless you absolutely really need to do it for grabbing share, is raise enough to get through 2021, call it 18 months. Don't start a big $10 million raise, for a new investor. It's okay to continue a process underway, particularly if it's far along, but recognize investors need more time than usual. And your best investors right now for that raise through 2021 are your current ones. Convertible notes are a great tool. They're quick to paper. They're short. They're 30-ish pages. A safe is like 4 to 6. That's even quicker. And obviously, cares money. I mean, there's so much being said about that. I won't say much, but that's great if you can get it. Quickly, family offices, high net worth are the first capital to dry up. That's because they're the most distracted. They've got family issues. They've got portfolios with multiple sectors. They've got their own businesses. This is just one of 10 things they're doing. Institutional investors, a lot of the people in this room, you have a mandate. Your mandate is to put money into branded CPG products. That hasn't changed. Granted, you have to prioritize support of existing companies and things, but very many individual or institutions have called and said, hey, we're still open for business. Nothing's changed. We need a little more time, but nothing's changed, which is great. Strategics are a little bit of a mixed bag, and that's a moving target. Some large strategics, particularly international, have M&A bans right now. I know of processes that are in place where those are being quote unquote broken to continue processes. Some of them have immediate operational issues like supply chain disruptions or 10x demand in supply chain on certain items, as you might imagine, hand sanitizer and things. So there's still great liquidity, access to capital. The stocks are all doing well. I think that's a very temporary thing, but today there's a little bit of distraction there. In talking to investors, being honest and transparent is the most important thing. Your existing investors and new investors all expect some adverse news out of this, even though you're probably up 30 or 50% in March. That could be anything from your supply chain is challenged to whatever. Be upfront with as much of that as possible so that the surprises are positive. Right now, investors, they're always focused on risk versus return, and things like this tend to push people to look more at risk. Know your forecast plan in detail. Get data from any source you can. Know your syndicated data right now is going to be a little bit puffed up in March just because of things. It's gonna be hard to kind of read trends. You can get store level data. You can get, your order pattern is very good. Your distributor inventory is great. Anything you can get week by week. It's very important to be able to tell a clear story about where your data is. And use this opportunity to impress and stand out and benchmark it yourself against or benchmark companies against other people in the category. Are you outperforming them or other like companies that you can compare to in other categories? Another thing that there's been a lot of discussion around is, how do you kind of manage your business during COVID for, cash preservation? And I've distilled down a few things that I've heard from a few different webinars into one slide here. I'm not going to read everything here, but basically some of this is intuitive, but right now, if there's heavy demand, eliminate as much trade spend as you can. People are buying your product anyway. A lot of resets are being delayed a few weeks or even a few months. So, planning new innovation, you can probably push that off. Look at your cash flow on a daily or weekly basis. The last thing you want to do is have to have some kind of adverse, business decision just because you're unexpectedly low. And that can be for good things like, massive uptick in orders. This is a great time to negotiate better terms from distributors and suppliers. We're all in this together. Everybody wants everybody to survive so that we're here on the other side. Ears are open. Prioritize your high velocity, high margin items. If you've got to make a decision on where to put your production money, the things that are high velocity and high margin are going to be the biggest bang for the buck. And then production and logistics, obviously, anything you can do there to make demand, and refining your marketing budgets and messaging too. Lastly, there are some silver linings, and I think we all have challenges during these times, and some of them are very deeply personal, and this can be very close to home for everybody. So, I think at times when we need to draw strength from things and look forward, I think the silver linings are something that are uplifting. And if you think about this scenario, people are already jumping into immunity products like crazy. You can see it in the sell-through data. There's a clear focus on wellness, and this is something that people have been hypothesizing for years. But more and more people are going to look at things like COVID, and they're going to move into healthier food and beverage habits, because at the end of the day, if there's a superbug like this, all you have is your immunity if you get it. Moving away from individualism, there's going to be new investments in public goods, for health, especially in public services. That's a positive for this industry. Right now, expansion of online, not just for sales, but also potentially for marketing and things. We've got a whole country that's suddenly very Zoom capable and using Zoom for lots and lots of different things. I should say Zoom, but any kind of video conferencing. That can be for webinars around functional foods and things like that. So I think the expansion of online and community around online is going to happen. Domestic self-sufficiency, you're already hearing this from politicians, but the idea that we can produce everything domestically or reduce the need for imports is gaining steam. And that's actually really interesting when you think about land conservation and making our arable land more productive. Our country right now has 12% of the world's arable land, and we're projected about 4% of the population long term. So we are going to be a net exporter. And more biodiversity and things that come out of that domestic self-sufficiency are a real plus. Post-crisis boom, thinking of the 1918 flu, radios and cars came out of that. So more and more people seek stress relief and pleasure and community. And then lastly is increase in community. You're already seeing this at in your neighborhoods and in towns and in our industry, which is probably one of the most community-based industries I've seen. I think it's going to get even more collaborative, which is really great. And that's all I have for today.
Thank you, Nick. Nick's presentation is always a highlight of our NCN meetings. So let's get started with our first pitch. Okay, now we're back. We'd love to welcome Kendall and Katie from Squarebaby.
Hello there. Thanks so much for having us.
It's so nice to see you. How are you doing today?
We're doing great.
Awesome. Well, we're so grateful to have you pitching today. So are you ready to go?
We're ready.
Okay, cool. I'll start your 2-minute timer right now.
All right. Hi, I'm Katie Thompson, co-founder and CEO of Squarebaby. As a mom of 2 boys and a registered dietitian, who spent 15 years in the food industry, I was appalled at what I found in the baby food aisle. Did you know that most baby foods have the same nutrition as a bowl of sugar cereal? It's true. This is a problem. The extreme sweetness is guiding their palate to crave more sweets. And even worse, many brands are misleading customers with fancy buzzwords and pictures, masquerading as a balanced option when in reality, they're not. This started a fire in me, and I was determined to create a better solution. Introducing Squarebaby, the only baby food company offering 100% daily nutrition, where every meal is square and balanced with organic veggies, fruits, whole grains, and protein. And most importantly, we have half the sugar of most pouches. With our recent launch of coconut shrimp fried rice and almond butter and banana, we are now the only fresh baby food company offering each of the top 8 allergens, because research has proven that introducing allergens early and often actually helps to reduce the risk of baby developing a food allergy. And every meal plan is tailored to your kiddo, so whether you're a meat eater or vegan or vegetarian, we got you. Customized to your heart's content, because our Square meal system is foolproof. Every meal is interchangeable within the system, and when combined, ladder up to 100% daily nutrition. Thank God for no meal prep or trips to the store. Our meals are delivered in a 100% compostable and recyclable box with dry ice. Our best-in-class product and customer experience is resulting in high levels of customer loyalty. In fact, 33% of our customers spend on average of $1,000, and they do so in just about 3 to 6 months. So imagine if we could keep them just a little bit longer. Join us as we capitalize on our largest opportunity, evolving to Square Foods with the introduction of family-friendly smoothies, bowls, and toddler meals, so parents can keep calm and nom nom. Thank you.
Wow, that was awesome. That was so perfectly timed. Great work. Thank you so much. We'll now move on to our Q&A portion, and Ashley from our team will be asking you your question. So you'll have 30 seconds to answer this. So just after she finishes the question, you can go ahead with your answer.
Great. Thanks, Katie. Thanks for being here. My question is, what are you looking for in an investment partner?
Question. As an early stage company who has a lot of growth ahead of us, we are really looking for investors who are coming to the table with experience in direct to consumer, in food, those with operational experience, and those who really just believe in our mission and our dream. We know that joining our family early is an amazing opportunity and something that we'd be excited to bring a qualified but excited investor.
You're amazing. You're nailing it on the time. Perfect. And Will.
Yeah, great job, Camille and Katie. Thank you. Love the piece on the mission. It's really strong, and we're grateful to have you here with us today. So to stay on schedule, let's move on to our second pitch. All right. It is my pleasure to welcome Jake DeLeon, founder of Origin Almond. Are you ready for your pitch, Jake?
I'm ready. Thank you.
All right, so we're ready to go. We'll start your 2-minute timer now.
All right. Hello there. My name is Jake DeLeon. I'm the founder and CEO of Origin Almond, and we are here to combat the excess sugar problem. And we're going to do this by reinventing sugary juice. If you see from the next slide, I worked in big food for 15 years and had my own struggles with childhood obesity to come to an understanding that, at least in the nutritional world, excess sugar has become public enemy number one. Perhaps one of the hardest hit categories and one of the areas that's in desperate need of innovation is sugary fruit juice. If you go to the next slide, you'll see that our solution at Origin Almond is pretty weird, but yet it's a unique way of tackling the problem, and that is to juice almonds and not sugary fruit. So Origin Almond, it's a line of low sugar juice beverages that are amazingly made from almonds and not fruit. Basically, we take innovation and we use technology to transform almonds, which are otherwise known as a creamy product, into a more refreshing juice beverage. On top of that low sugar juice platform, we layer functional fruits, vegetables, and other spices to provide a functional benefit for consumers. And if you'll see our product line in the next slide, it's basically our strategy is simple, is to take the most popular single serve functional juices and make a low sugar and relevant alternative to it. you'll see that all of our products have at most 3 grams of sugar for the entire bottle. And since we're using almonds, which are chock full of great macros, all of our products are keto friendly and happen to be the only juice product that's diabetic friendly as well. Now you'll see in the next slide that our mission is very meaningful to me, at least. It's to reduce excess sugar by use of innovation. I mean, we're starting with replacing single serve functional juices, but then we're using that low sugar platform to go into other verticals that use juice as a main component. So imagine a multi-serve juice with 1 gram of sugar, all the way down to a nice low sugar gelato. Now we're small, but we're a growing company. For every bottle of Origin Almond we sell, we eliminate 40 grams of sugar from the American diet. To date, we have almost eliminated 10,000 pounds of sugar that did not have to be eaten.
You could take just a few seconds to finish your sentence though.
A bit about myself. So I started the company with a mission. I struggled with obesity, and then I worked in CPG. But most recently, one of our great accomplishments is that we partnered with Kraft Heinz, who believes in our mission and has invested $100,000 in us. And I hope and thank you for listening to my message, and hope we could partner to reinvent juice together.
Perfect. Thank you so much, Jake. So now we're going to move into our Q&A portion with Tara.
Hey, so Jake, that was great. And, I love the idea of your product and grateful that you're solving for this problem that exists, but with a tasty option. So everybody still gets that effective nutrition with a good taste. You touched on your personal experience and why you founded this product, but can you elaborate a little bit more on this adversity that you overcame and why that makes you a good candidate for investment?
Yeah, absolutely. So I myself am a first-generation immigrant. So with most immigrant families, and arguably most American families these days, I grew up with a lot of sugary drinks and high-carb foods in the house. I know that was a big factor to my childhood obesity. So I took that personal pain, I grew out of it, but then I kind of thought about, is there a way I can develop a product that solved that particular pain point? I like juice, I just didn't like the sugar of it. And then so I figured if people had a better option, they would kind of go about in choosing our option for that. Is that a good answer?
That was great. Thank you so much, Jake.
Hi, Mike.
Hi.
Hi.
Glad you joined us today. Thank you.
Yeah.
Perfect. That was great. Thank you again, Jake.
All right, guys. Thank you so much. Appreciate your time. Thanks for putting this together and a great innovation to do this instead of the face-to-face. I hope to see all you guys in Philly.
Okay, everybody, we're back. And next up, we have Nydia and Sarah from Worthy.
Thank you so much for joining us, Nydia. We'll start your 2-minute timer now.
Hi, my name is Nydia Shipman, and on behalf of myself and my partner, Sarah Renahan, I'd like to introduce you to the Worthy Company. A few years ago, we came across a real challenge. We couldn't find any on-the-go, delicious, plant-based snacks offering complete nutrition, so we decided to make it ourselves. At our core, we believe all people are worthy of whole, nourishing foods that feed the body and spirit. It's why we founded a company rooted in values that are far bigger than our bottom line. This mission drives us to produce an incredible product that nourishes the goodness in all of us. Worthy is not just our name, it's a movement, and we are thrilled that our Worthy Bowls provide the vehicle to support partnerships with the mission to nourish self-worth. We're so proud to introduce you to our first product, the Worthy Bowl. As you can see in slide 2, our category-creating Worthy Bowls are a nutritional powerhouse, offering complete nutrition from 3 plant servings of whole upcycled veggies and fruits and 8 grams each of protein and fiber from legumes and chia, all in a reasonably priced, spoonable format. As shown in slide 3, our 5 flavors of Worthy Bowls attract consumers from the combined $20 billion categories of pressed juices and smoothies, meal replacements, protein bars, and yogurt. As shown in slide 4, we saw a glaring white space in the market, and we are proud that our Worthy Bowls are blazing a trail and are so category creating. As you can see in slide 5, we are a consumer-obsessed brand with an omni-channel distribution strategy, including a robust and growing e-commerce business, thanks to our shelf stability. As we show in slide 6, Our Worthy Bowls are just the beginning. Our brand and our product concept of well-rounded nutrition transcends generations and categories. Please join us and let's stir up the future of food together. Thank you.
So well done. Thank you so much. So we'll move into our Q&A portion, and this will be with my teammate, Claire.
Hi, Nydia. Thank you so much for that presentation. It's so great to hear more about your company. And you talked about this for just a second at the beginning, but I want to ask, what is the strongest driver that led to the formation of your company?
Well, the strongest driver for the launch of the Worthy Company was the fact that Nidhi and I were new moms, and we were looking for nourishment for our bodies on the go. And we knew that we had something very special on our hands, but we also knew that it would require a great deal of time. And so we decided when we launched our company that it had to have a mission greater than ourselves. And that's where the name was born, and the focus on nourishment for the body and the spirit.
Well, thank you both so much. That was beautifully done. So well answered and so well delivered. So we appreciate you, and we're looking forward to seeing you hopefully soon.
Yes.
Thank you for this opportunity and for doing this. We really appreciate the exposure. Thank you.
Thank you, Sarah.
All right, now we're back with pitch number 4, Gary LeBlanc, CEO and co-founder of ZeroDB. Ready for your pitch, Gary?
Yeah, let's go.
Gary, thank you so much for joining us. We're going to start your 2-minute timer now.
Great. I was actually curious about how I was going to show the brand as much as I am, so I had to improvise. So, hope everybody's doing well. I'm introducing ZeroDB. Silence, the absence of noise. How many moments is your mind truly silent? I can count them on one hand. Sabotaging our ability to experience these moments of silence is mental noise. What would you do to get some relief? The chance to breathe and think clearly. And when do you need it most? Before that conversation you're not looking forward to? After a brutal day? Or maybe minutes before a presentation that simply must go well? What we need is a way to quiet the noise, to create space for clarity and inspiration during the times we need it most. And with 8 out of 10 people dealing with chronic stress, we're long overdue. Judging from popular news, the cannabinoid CBD has emerged as the better for you option to calm our mental noise. However, CBD is heavily weighed down by lack of research and a torturous regulatory landscape. What if there was a better option? Imagine a product powered by cannabinoids from cannabis-free plant extracts, based on decades of scientific research, that's orders of magnitude more effective than CBD. Now imagine that this product is a sparkling beverage that's organic, low calorie, and non-GMO, with none of the legal restrictions affecting CBD, and that tastes fantastic and feels amazing. We believe this product would be revolutionary. Welcome to the world of 0 decibels. Introducing ZeroDB, the world's first noise-canceling beverage. Thank you.
That was awesome. Perfect. Thank you so much. So now we're going to move into our Q&A portion, and asking your question.
Great. Thank you, Gary. My question is, and you touched on this a little bit, but how do you envision your product will change the world?
Well, really what's affecting people the most right now, and especially in this day and age, as you can imagine, is people are dealing with chronic anxiety. So that fight or flight we always talk about, it's gotten out of control. Our beverage is there to help modulate that anxiety, to help bring people back to where they're at peace. That's how we're going to affect people. And since everybody's dealing with it, it's going to be essentially ubiquitous as far as the need.
Thank you, Gary. Peace sounds quite magical right now. So thank you so much.
All right, guys. Thanks so much for your time. Sorry you guys had to deal with so much chaos. That is crazy. So thank you for putting so much effort into getting this done regardless. It means a lot. And with all you guys are dealing with as well, I can only imagine how much more difficult it was. So thank you so much, Denver. And good luck to the rest of the people coming out.
Well, thank you so much for saying that. We appreciate
Thank
you.
you.
Have a great day.
Great. Take care, guys.
Bye, Gary.
See you later.
Okay, welcome back, everybody. Next up, we have Richa from Good Food for Good.
Thank you so much for joining us, Richo. We're super excited to have you, and we'll start your 2-minute timer now.
Thank you. I'm super excited to be here too. So hi, I'm Richa, founder of Good Food for Good. As a working mom and an industry veteran, I was frustrated with current products that forced us to choose between quality and convenience. I was also seeking to make a difference in the world, and Good Food for Good allowed me to fulfill both with one solution. As you know, on one side, 1 in 5 deaths are linked to a diet high in sugar, salt, and processed meat. And on the other side, 1 in 9 people still go to bed hungry. At Good Food for Good, we want to make a difference in these two food-related issues with one solution. We are on a mission to make it easy for people to eat well and do good. Ladies and gentlemen, introducing Good Food for Good sauces that allow you to add the flavor you crave to your healthy meals without added sugars, allergens, and preservatives. Believe it or not, some of the conventional sauces have more sugar per serving than cookies. But that's not all. Every time you buy our sauces, we also feed a person in need through our giving partners like Food Banks Canada, L.A. Food Banks, and we have fed over 300,000 and are on a mission to feed 1 million by end of this year. If you have ever tried to feed your family something healthy, you know what I'm talking about on this slide. Reviews like the ones you see in the video are from our little fans that keep us motivated and are a key differentiator for our products. Combination of great ingredients, delicious taste, and social mission has led to our growth in the last few years. We are available nationally in Canada and just launching in US at Whole Foods after a successful trial with Thrive Market. All this love and hard work has also helped us get recognition in the media in Canada and United States. So would you like to join us in making a difference? Thank you.
Thank you so much. That was perfect. All right, so we're going to move on to the Q&A portion, and we'll have Tara ask this question.
Sounds good.
Yeah, thank you so much for telling us about your company and your mission, and you touched on that. And you know, we all would love to know you and your personal reason for bringing forth this mission as part of your product launch and integrating that into your go-to-market and everything that you've been doing.
Sure. It's a longer story than what 30 seconds would cover, but I'll try and zip through it. So it all started over 20 years ago. I worked in fashion and I saw things that just moved me at that time with how artisans were living. And at that time, I didn't do anything about it. And that feeling kept clawing back at me. So even when I was working at General Mills, I thought working in fashion was superficial. Maybe working in food would solve that issue. It didn't. So when I started this business, I wanted to make sure I have a giving mission or I have a giving linked to it for my own personal calling or satisfaction or purpose, whatever you may want to call it. It's a personal law. I felt I couldn't go on doing work without being able to make a difference.
That's amazing. Thank you. Great answer.
Thank you.
Yeah, we really love your company, and we're so grateful that you would share your story and just in a little bit of a different way on webcast instead of in person, but the story and the mission and your great work come through just as well. So we appreciate you.
Thank you. Thank you for giving me the opportunity. I really appreciate everything that New Hope is doing. Take care.
Thank you so much.
Thank you.
Bye.
Thanks. All right, please welcome Michael and Sean from Uala Pure Purple Power.
Thank you so much, Will, and welcome, Mike and Sean. I love this product, and I'm super excited to have you both here. So we'll get started on your 2-minute timer now.
Hi, I'm Mike D'Annunzio, and with me is Sean Aharam. Uala is an innovative purple sweet potato-based food brand that offers versatile, shelf-stable power shots and cups that don't have dairy, nut milk, soy, or fillers, and they taste great. And the benefit to the consumer is it gives them the power to push through those tough moments so they can make it to the great ones. The idea started almost 5 years ago in Sean's kitchen, and we launched at the very end of Q3 in 100 Target locations, mostly in the West. We've surrounded ourselves with experienced entrepreneurial food executives and have worked very hard to build a supply chain that we think can scale for many years. Our Target launch in Q4 and our NorCal specialty door launch in Q1 has been very instructive. Sean has done a tremendous number of demos, and through that, we've learned a lot. What attributes of our product are the most important? What are the use cases? Who our first, most loyal customers are? But we've also learned that while the product's been very, very well received, we've heard from countless consumers that they would love this product if it were in a more portable, on-the-go format. And so we're really happy today to announce that we're launching the Power Shots. The same formulation, same supply chain, same functional benefits, and same great taste. And while the plan for 2020 was to continue with the cups as well as launch the Power Shots, COVID has forced us to reassess our business. So given all the momentum that you see from the slide on the right, we're very excited to push into the market with the shots, and we'll bring back the cups once the business conditions warrant. We're planning to reach around $9 million in sales in the third year with what we think are healthy gross margins and a diversified revenue base between direct-to-consumer and retail. We'd very much like to tell you more about Uala. We thank you for your time, and hopefully you'll get to experience more about pure purple power. Thank you.
Thank you so much, Mike. That was great. I'm super excited about these Power Shots. That's awesome.
Thank you.
So we're going to move into our Q&A portion next, and that'll be with Claire.
Hey guys, thanks so much for joining us today.
Hi, Claire.
Hi, Claire.
You talked a little bit about what you've learned so far in the process, but I'd like to ask, if you could start over, what would you do differently?
I'll leave that to Sean since he started 3 years before I got involved.
You know, I think what the main thing that we've learned is we have a very unique formulation, and the initial response that we've gotten from the target audience, being the runners and the cyclists, is they're really craving this functionality that they're getting from the complex carbohydrates, the super clean ingredients, and the form factor. So if I could go back, rewind the clock, I would have launched first with the Power Shots, so you can really communicate that formulation, and then bring in the Power Cups after that. But we've only been in the market for a couple of months now, and what I've been able to learn, just engaging with the consumer, really seeing how they're responding to this product. I know there's a place eventually for both form factors, but that would be the biggest learning, is really getting that portable form factor that doesn't require a spoon, and the person can just take it on the go, because that's who is really responding to this formulation. But again, you know, the cups are well received, and in my opinion, I think we have a great opportunity with both form factors, but the shot is definitely very clear on how to use it.
Awesome. Well, it sounds like you guys are doing a great job innovating and moving quickly, and we're just really excited about your brand.
Great.
Yeah, thank you both so much. I'm a mountain biker, and so I'm pretty stoked about these shots.
Yeah,
no matter when they come out, it will be amazing to have them. So we appreciate you.
Great.
Great.
And the beauty of this shot too, for example, it's a small format, so it's about 2.3 ounces. So we've done a lot of testing. It'll fit in a drop pocket of a running short, biking clothes, any kind of pack. So it's super compact and easy to take on the go.
That's awesome.
Yeah,
well, cool.
Perfect for mountain bikers.
Lovely. I can't wait. Well, thank you both so much for joining us. We really appreciate you taking on this little bit of a different format. Though it's not in person, you know, we think that your stories are super important to tell, and we're really grateful to be able to bring them to market just in a little bit of a different way.
Sure.
It's great. Thank you very much. We're really excited. Thank you.
Okay, we're back, and I'm here with our last presenter, Ted Fleming from Partake Brewing.
Hey, Ted, we're really looking forward to hearing your pitch. So you can start your 2-minute timing right now.
Okay, great. Well, thanks everybody. My name is Ted Fleming. I'm the founder and CEO of Partake Brewing, and we're making some of the world's best craft non-alcoholic beer. So why should you be interested in the non-alcoholic beer market? Well, it's been growing rapidly globally for the last few years, even into almost spanning into decades, and it's projected to be a 25 billion US market by 2024. I think particularly exciting is the opportunity in North America. We're quite a bit behind Europe in terms of market penetration for non-alcoholic beer. That stems largely from the fact that there haven't been good products here, and we're solving that issue with variety and taste. U.S. market is less than $1 billion annually, and Germany and Spain, for instance, are 5 and 10 billion respectively. So we see a lot of opportunity to grow there. We've proven ourselves out in many retailers, one of which is the LCBO in Ontario. There we're in 300 plus stores, and we're outselling non-alcoholic offerings from Budweiser and Heineken combined. So yes, our sales are more than Heineken plus Budweiser in the non-alc category. And that extends to other retailers as well. Right now we've scaled 4 popular styles, which is our IPA, our pale ale, a blonde ale, and a stout. And we've recently launched a red ale as well. Our products are known for their great taste. We've won the World Beer Award for Best Non-Alcoholic Beer, but more specifically to us, all our products are ultra low in calories. So just 30 calories per can down to just 10 calories. So it's basically a calorie-free beverage almost. We're partnered with some great retailers already. We're in 300 plus points of sale across North America, including 350 in the US. Some key retailers include Loblaws, Total Wine, Whole Foods, and the LCBO. And just some quick info about our financials. 300,000 points of sales, as I said. We have very high sales velocities of 36 unit per week per store. Gross margins over 40%. Our trailing 12 months is 3.5 million Canadian, and a run rate of close to 5 right now. And
next time, and I'll give you just a few seconds to finish it.
Yeah. And just to project it into the next 12 months, which is a little difficult right now, we're looking at a base sales of 5 million to a high of 15.
Awesome. Thank you so much, Ted. And congrats on winning that award. That's amazing.
Thank you.
Sure, I think we do have your product in our office, but I haven't tried it. So I'm super excited about that. So we'll move into our final Q&A portion of the day, and Ashley is going to be asking that question.
Great. Hi, Ted. I had a chance to try your beer at the NCN Canada meeting, and I was really impressed. It did taste like an actual beer. So thanks for being here. My question is, what is one big lesson you've learned on your journey of entrepreneurship?
Wow. There's a lot of great lessons, but I think one is patience. I've been at the non-alcoholic beer business for almost 7 years now, and for many of those early years, we were well ahead of the market, and people said this wasn't a thing, and I was crazy. And I think you need to have just conviction in your idea and patience to see it through. And I think we're being rewarded for that. So I think that's a big one for me.
Great.
Such a great answer, and literally right at 30 seconds. So perfectly answered. And I'm sure there's so many people in our office I know who have gone non-alcoholic over the years and are very grateful that you stuck it out. So thank you for what you're bringing to market. Thank you for joining us today. And we just really appreciate you.
Yeah, thanks for doing this, guys, and giving us a platform to tell our stories.
Absolutely.
Hi.
Hi.
Good timing on her part too.
All
right. Is that it for me, guys?
Yep, that's it.
All right. Cheers. Have a good day.
Thanks.
And that concludes our first ever NCN All-Star virtual event. Thank you so much for being here today. And thanks again to all of our amazing brands who shared their stories.
Yes, thank you all for joining. Thank you, the sponsors and cornerstones. Thanks again.
And this is another reminder for investors that our NCN Investor Spring Meeting is going digital towards the end of June, with details and registration to be released soon. I also want to remind any active investor who's with us today to reach out to me directly for an invite to our personalized nutrition discussion taking place next Thursday, April 30th, with the NBJ team and Greg McParland from DSM. Thanks again to our cornerstone investors, sponsors, and presenters. We look forward to seeing folks next week for the MBJ session and early summer for our first full-length NCN digital meeting. Thanks, guys.
Just as a reminder, our presenters are waiting to hear from you. Log in to the NCN Engage tool now so you can set up your 30-minute one-on-one meetings to ask your questions and get to know these amazing presenters better. For more information about all of our events, you can go to nutritioncapital.com and find out about our full calendar of events that happen all over the world with all different types of companies, all different types of presenters, and inviting all different types of active investors. We're so grateful that you spent the afternoon with us, and we're really looking forward to the rest of our season.